Hey traders, what's happening? Jamie Saettele here. It is December 27th, 2017, and this is the last midweek strategy webinar of 2017. Let me know that you can hear me. And that you can, of course, see the screen, or what's on my screen. Thomas says yes. Okay. All right. So I love the combination of our analog, which continues to just play beautifully, right? Iman, Merry Christmas to you too. So yes, the analog, remember with the dollar analog, continues to just play perfectly. I mean, granted, the last 5 or so days, dollar-wise, with Christmas and everything, you're not going to get huge moves. But generally speaking, I mean, it's following the script of getting lower, lower levels, right? And kind of a sell on rally type of thing. So this was, if you didn't see last night's update, this is what I'm talking about, the combination of the analog and then this headline. So remember, the way that I like to read these headlines, contrarian, right? You're looking for, some sort of certain words, right? There's different kinds of, I guess what I would say, degrees of fadeable type of headlines. You've got, when you see things like dollar soars or dollar plunges, those are ones that you typically would expect to see at least a short-term bounce if it's like plunge, or a dip if it's like soar, right? But these are the best kinds because these are the ones that include predictions in their headline. So when you have a prediction within the headline itself, that is the type of headline that it tends to happen or occur before a very strong move in the opposite direction. So in this case, tax plan likely to boost dollar would tell me that the dollar is about to head lower and potentially sharply lower because of the prediction aspect of it, right? And why would that be, right? Well, you have to think that you have a reporter, right? A reporter, financial reporter is just that. They're not professionals in terms of trading and investing. They just report, right? And markets are not, casual or causal, to external news events, albeit on, maybe short-term movements. So very short-term movements. So the way they look at markets, in my opinion, are just, they're just wrong, right? So when they take an external event and try to predict it, one, it indicates kind of the conventional wisdom, and indicates that it's already that ship's probably already sailed, right? It's probably already priced into the market anyway. And it's very unlikely to happen in this manner. So yeah, I very strongly am looking at just general dollar downside as we head through January. Now that does go against the seasonal aspects. So like here are seasonals for dollar, right? Dollar actually does historically has early seasonal strength through the first couple of months of the year. Now it didn't happen last year, right? Remember we topped last year right in the beginning of the year and headed lower. So, this is one aspect, or that does not agree, so to speak, with the bearish dollar bias, I guess, but that's okay. Not everything is going to, or it's rare that everything is going to line up. So, want to be looking at selling kind of dollar strength, if you will. This is US dollar, and for me, you can see this parallel. So if you draw a parallel or draw a fork with the back to the 731 low, 815 high, and then 97 low, or 98 low, excuse me. If you have a parallel that extends off of this low on 1013, right? It was resistance back here, 921, support 1013. Lots of spikes down through it, and support very recently, 12, 14, 15, all the way up through really 1221, and traded up into it, in fact, yesterday morning. So that would be an area that I would watch for resistance, general dollar resistance. Okay, that would probably be about 11.96, about 11.965 or so. So, to keep it simple, just kind of heading into 2018, sounds weird to say that already, 2018, looking for kind of a sell, any sort of bounce. Now let's look at quickly. So many years ago, when I was, just observing kind of your markets here. This is Euro, by the way, which, as you can see, we are just about done with the year. We just traded into that month open again, and we were backing off a bit. So maybe we get a bit of a pullback here before, we'd be looking to buy Euro again. But magenta lines here is the year open, right? And I just know I plotted this and looked at it visually and thought it was very interesting because I noticed that you tended to get what would be considered not random, right? Number of highs and lows on the very first day of the year. And so, your opening for the year can really be an amazing opening range, so to speak. And, just an opening range breakout type of thing. It happened last year with Euro, of course. So, here we had 1.3, it's low for the year. Coming into 2018, should we be looking for? There's going to be some market. There's always a market somewhere where it makes its exact low or high for the first day of the year, and it doesn't really look back. Euro, actually, for as bearish as I am dollar here, I actually think the better setups heading, again to trade to pair against the dollar. This chart looks okay. Euro, right? You've got good potential here with this inverse head and shoulders, but I think the Australian dollar might be the one, or really commodity currencies, Aussie dollar, dollar CAD, Kiwi dollar might be the ones to really look at for making their low right away. And Aussie dollar did it last year too. You can see we opened up here and opened up the year at 71.97. And the low for the entire year was 71.92. So it literally opened at the low, right? Market opens early January, right? You'll have market somewhere that'll make its low against the dollar for the entire year and rally immediately. So I like the idea of Aussie doing it. One is the fact that, I sent out the COT stuff last weekend, and we had Aussie, the where is it? Australian dollar traders. You can see the red specs. They actually flipped net short ever since the 2016 low. Whenever they flip net short, right, it's like that's the signal for the Australian dollar to start to rally again. So, you know, I love that. It just seems that it's in the right position. You've had some kind of capitulation type of capitulation type of action here with the Australian dollar. So you've got last 4 weeks of selling in the Australian dollar, right, is capitulation in nature. You can see that you haven't seen this amount of selling over 4 weeks by speculators really since back here in June of 2016, which was obviously an interim low, pretty decent low actually. So what I'm trying to get at here is, as we head into the new year, what market or markets would be best set up for, right off the bat to make their low against the US dollar, right? As we are, what I think, in this secular downtrend or a new cycle downtrend in the US dollar, what markets, right away, literally open on whatever the date will be, January 2nd, because obviously January 1st markets are closed. So January 2nd will be a Tuesday. Somewhere will open and literally make its low against the dollar for the whole year. So the Aussie is one of them. Now, in order for that to set up, you'd obviously like to see, maybe a pullback here, right? I've been leaving orders to buy Aussie and Kiwi and sell dollar CAD really over the last week. Haven't gotten triggered on any of them. But the idea has been that, we want to try to get in position for this open for the new year, and what I think could actually be, maybe a low for the entire year against the US dollar. So if we go back to the charts that we've been looking at recently, so here is Aussie actually testing resistance here from the upper parallel, right? And would be what I would say is a pretty good spot for a pullback, or at least a pause. And ideally, hopefully, we can get that pullback and then get triggered on a long. At this point, I still think that your best bet for entry is going to be on this median line, which is from a very short-term fork, yes, but was really good support throughout last week. And, simply I like to kind of buy support where support's been before. So that level will be in play. It could be, next week for all I know, but that's what I'll be focusing on as we head into the year, right? Obviously, end of year, not a whole lot of catalysts supposedly, for price action other than simply the ebb and flow of the markets, but not a whole lot of participation, this week. This week historically is the quietest of the year in terms of volume, especially in FX. So not a lot going on, but focus here is going to be on selling any sort of dollar bounce over the next week, I would say. So Aussie's one to certainly concentrate on, especially on any weakness. All right, what about Kiwi is another one that I like very much. This is also, and not surprisingly, testing major resistance, and this is actually significant. You've got the trend line from 2015-2016, which, as we know, was great support back here in May of 2017. So it is a valid trend line touching 3 points. This one's kind of a doozy. We had the entry at 69.01 on 12/12. Low is 6,900, but that was bid. We didn't get triggered, missed it by about a pip. Here we are now at resistance. If we do get a pullback at this point, thinking that you probably are going to get support from a lower parallel. With both Aussie and Kiwi, there are not super clean short-term slopes to deal with, right, or to operate with. Because we really haven't had a pullback to test to see where the support would be, right? Aussie's a little cleaner. You got that median line that we've been talking about, but Kiwi not really that clean at all in the very short term, at least to me. I do know we'll say that we are literally at resistance right now. Okay, so would like to see a pullback. I think that would set it up for a buy the dip opportunity. You know, early next week, maybe right on the open, right? And your best bet at this point going to be about 69.80. Of course, that's the high from 11.9. So you've got the November high there. And if we were to get down into that region on Tuesday, right when we open for 2018, you could be sitting on a lower parallel, short-term lower parallel here. Okay. So that will be one to watch as well. Let's see what I want to see what the Kiwi situation year open looked like. So Kiwi's year open actually is just about right here. Leon says, does low have to be on the first day? No. I mean, but here's the thing, though. You'll be surprised how often it does happen. That's all I'm saying, right? Yes, the first week generally can be used as an opening range, but you'd be surprised how often you get a move right out of the gate, right? So that's all. That's all I'm getting at. Mahai, yeah, we will look at the DAX, and then your new obsession Bitcoin, we'll look at that too. Okay, so back real quickly here to Kiwi. If we're looking at this chart, year open last year, 69.27. So, you know, really kind of closing unchanged here for the year, but getting what, you know, I would say you could have really a 5 waves up here too. So 1, 2, 3, 4, 5. Look at it on the daily close basis. So again, sets up super well for if we can kind of turn over right now and have a dip to correct the 5-wave rally that you had from the low on November 17th, it'd really be perfect, right? To set up for a pullback in wave 2, and then, you know, screaming higher in wave 3 to start the year, right? Would be a great way to set up a Kiwi long. Okay, what about dollar CAD? Dollar CAD's probably the one that I am most interested in as we head into the new year. So you've got some pretty good short-term slope. We just bottomed on a square root level here. 26.31 is that root level, and I'd still probably want to sell it up on the short-term parallel that we talked about in the update last night, right? You can see that level, precise resistance here on 12.22. If we can get a bit of a bounce, maybe get back up into the weekly open, 27.13. Entry, of course, last night was 27.50. That's the high volume level from way back here. I don't know if you're going to get that at this point, but 27.13 could certainly be one to pay attention to. Again, that's the week open, and pretty good, just a good horizontal level, right? Going back really since early November. Last Friday, I guess it was, we had that spike after CAD data up to 27.95. Entry was left at 27.99. Unfortunately, that was just missed, of course, and idea being the right one, right? And that we want to sell dollar CAD strength. However, just a few ticks off, and unfortunate, but it happens. All right, so anyway, going back to dollar CAD, want to sell bounces. That's why I'm looking at the short-term chart. Where would we want to sell bounces? I think 27.13 would be the best area to do so over the next, again, couple of days. If we go to the longer-term chart, I mean, if you look at it in this manner, right, back to the 2012 channel, just a beautiful response that we've had here. You've got a new downtrend, lower highs, lower lows, and dollar CAD heading into 2018, which is one reason why I like or think that this is, one of the candidates for kind of a right out of the gate, move lower. Again, the only thing going against all this is the seasonal stuff, right? Dollar January does tend to be historically stronger. So, that's all. But that's why we use risk management techniques. We never know if we're right, 100% confidence in a trade or an idea or whatever. Once you think you know what's going to happen, you're really only fooling yourself. It's not to say, don't trade with confidence, but don't trade as if you think you know exactly what's going to happen. All right, so heading into next year, test is going to be probably about 25.40, 25.50. Again, that's the 2012, or trend line from the 2012 area. So that was going through 2013, 2014, and then there was pretty good pivot action around it. Actually, this year you had to break below it. This was the surprise Bank of Canada rate hike. But then we came back to it. It was resistance. We pulled back, got back above it, and then it was pretty close to being support for another move higher. So just a big area to pay attention to. But yeah, I want to be selling strength. You've got the moving averages on here too. I've got the 55-day. 55-day was, pretty good support in the fourth quarter, support in October, support back here on December 5th. Now we're back below it. That is actually going to be fairly close to the level that I talked about wanting to sell into on the short-term chart, which is 27.13. So you've got 27, that 55-day average is going to be about 27.35 right now. And yeah, just a good spot, right, to potentially leave an order for tonight, right? Leaving orders tonight. I will see about obviously going into Friday, but I'm fine leaving orders tonight. Okay, let's move on. So the commodity currencies, in my opinion, are the ones that are going to be the best suited for that, right out of the gate, looking for a a strong response early in the year, and maybe even good lows against the dollar early in the year. All right, let's go to British pound. We've been in since December started, right over here. We've been in a really tight channel. This is like the one currency where things could go wrong against the dollar, right? Remember the long-term stuff that was written about. If you go to the long-term page and read up on pound dollar, that update from several weeks ago makes the case that we've topped in a big fourth wave up here within the cycle that goes all the way back to 2007. and that this is a 1, and then this is A, B, C, a flat, you know, from the October low. So really the entire fourth quarter just being a flat, right? And that you're going to open up with, you know, 2017, the potential for a third wave lower. So this would go totally against the idea of the dollar, but that's okay. If, you know, I'm totally wrong on the dollar being a big bear heading into early 2018 or even longer, then this might be the place to try it or to go against that. You know, you don't have a clean, you know, 5 down here or impulsive downside action since the December high, but that's okay. There's always the possibility of having a series of first and second waves. Follow this channel, right? You've got 3450 up here. The big levels to pay attention to still, however, even if you pop above this, that's okay. I would still watch 3466, 3478. Again, that's just daily reversal resistance, and the high volume level from back on, I guess it was 12.1 actually, that you had that high volume level in, excuse me, in British pounds. So I would, yeah, watch the, you know, cable as it scoots up into this area for potential resistance. And, you know, of course, you could always try to pair it on the crosses as well, like pound Aussie, pound CAD. Let's actually look at that. Yeah, so pound Aussie, pound CAD. This is pound CAD. Pound Aussie. Remember, we had the charts on pound Kiwi and pound Aussie and all that several weeks ago too, calling for the big top, and that has worked out pretty well. Pound Kiwi being the biggest one of all. So, you know, you could have these 3-wave corrections completed in the pound crosses from the lows back in October and January of this year, right? Okay, dollar yen. This is one that I don't really have much of a clue on, to be quite honest, at this point. So if we look at the dailies or the bigger picture trade, you do have this clean channel, right? Back to 2015, crosses through a bunch of stuff, including the resistance back on 11.6. And the trend line is up at, you know, it's 114s, and you know, just kind of been treading water here for 4 days. But that's where if you're gonna fail, that's where I'd look for it to fail, right? That's really about it. Now, if we drop down to say 1250 or something before then, it might actually be a long. I mean, right here, it's the middle of nowhere. So your levels to trade are 1250 and 114-ish. Call it 114.05. This is actually a yearly candle chart. And you can see this year, obviously a very small range in dollar yen, traded 107 to 118.66. Most of that was early in the year. Been in a pretty tight range for much of the second half, but you can see the importance of, you know, for the most part, call it 100, you know, 101 to 124, right? Major resistance up in this region. You've got years going back to 2003 where the highs for the year, you know, 1, 2, 3, 4, 5, 6, 7. I mean, tons of resistance up here. So something like this, looking at a yearly candle chart like this, right? Pretty rare to look at something like this, but yeah, this or even a quarterly chart, you can see just how important these big, huge levels are, right? really shows you the importance of the major levels. So at some point, we're going to have a major break through one of these regions. Until then, I'm open to both sides, obviously, in this. I do think, given the COT position right now, given the tendency for actually yen crosses to turn over early in the year, I would be looking for a drop, right? Maybe back towards the 108 area or something early next year. So as long as we're within this channel, the downtrend resistance up here should be paid attention to. And heading into 2018, looking at 114, that's where the 14 came from, as the potential level to sell dollar yen. Okay. So here's dollar yen. Do tend to top out early in the year, and there is some seasonal weakness throughout January for the Japan or for the dollar yen exchange rate. So strength for Japanese yen itself heading into early in the year. Okay, so that's it on the currency front. Bottom line is looking for opportunities to be a dollar seller on any sort of bounce as we head into the new year. Let's look at some commodities quickly, and then I will get to the DAX, and we'll look at Bitcoin and take some questions. So crude oil is extremely clean. This is a chart from last week, all right? We were looking for that triangle thrust, and we are getting it. Big rally yesterday, right? And that should be the beginning of the thrust that takes us, call it 61.50 to 62.50. But then I'd be looking for a pretty solid pullback. So, you get the triangle, and triangle breakouts from triangles under Elliott tend to be terminal in nature. And in this case, it certainly fits, especially if you go from the low in August 31st. You can count a very clean 1, 2, right, 3, sideways 4, and then this break higher in 5. So we'd be looking for a pullback. Now, again, it'd be a pullback still within a bull market. So I would just be looking for a pullback, probably have support down somewhere near the former, fourth wave terminus, which in this case, you've got, what is that, 56.12 to 54.96, right? End of the pattern is over here. End of the pattern in price is over here. So looking for support there. But Leon says, does any pullback in crude give a pause to short dollar CAD? I would say no. I'd look at them on their own merits at this point. One thing you've got to remember is that when we're looking at charts like of crude oil, we're looking at WTI crude, right? Well, there's actually different crude prices. So, Canadian crude actually has been trading at a deep discount to WTI. So that's one of the reasons why we haven't had the correlations that we've had. Historically they tend to move together, right? US crude, Canadian crude, dollar CAD, but we've had such a discount recently with Canadian crude that we haven't seen the Canadian dollar strength show up with crude oil strength. So we're kind of looking at two different things. So as long as that's the case, I wouldn't want to get too fancy or too cute about it. I'd rather just be, again, just be looking at the levels in CAD to trade CAD, and the levels in crude to trade crude. Now, certainly if, if we got a pullback in crude and dollar CAD just kind of treaded water for a little bit, that would be a good setup, because that would tell you that maybe things are back in line, right? But I wouldn't think too hard about it at this point. And don't forget, say we dollar CAD gets a bounce up to the 27.13 area. We're 26.50 right now. That can obviously happen very quickly, especially in a thin market like this. And let's say the crude pulls back from here a little bit. Well, then it's ready to make another run, right? Another $3 or $4 run, which could actually, to your point, could actually line up with the two moving together again. So at this point, I wouldn't think about it too hard. I'd look at them separately, right? But I think there could be a good opportunity to short crude oil up here, 61.50 to 62.50 sometime in early January, just for a sharp drop. All right, what about here's the crude yearly chart after last year's reversal, following through on it. Let's look at gold and silver and copper. Good heavens, copper's been on fire, hasn't it? Okay, so I was actually going through this last night after I did the update, and I was noticing, if we go to the hourly chart here, okay, so the original slope here back on 12.12 with those two lows. This is something you could watch. This would be, remember I suggested support probably back near 1270, which is the 200-day averages, and you've got the 1114 low over there. I'll watch this too, because that would be suggest support maybe a little higher, right? Support here probably be 1270, 1279, something like that, maybe 1280. Either way, we will look at it. We are in, as I noted last night, we are in the most bullish period of the year for gold and silver, and these are the combination of that and the COT stuff is really, really powerful. I mean, if you look at the gold seasonals, here's January, right? January, I mean, sticks out like a sore thumb. Oops, hold on, I gotta format this. Obviously, you guys, you know where the seasonals are on the chart, but or on the website, but yeah, here we are. So as of this week, we have entered the most bullish period of the year, which is the last 2 weeks in December and into really through February for the most part, right? So call it basically 8 weeks starting this week in a very, 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 very bullish period for gold. And again, the COT stuff that we've been looking at, gold getting sold out big time, all the metals getting sold out big time with the just extreme capitulation. And we've sent out a couple of these COT things over the last few weeks. And yeah, I mean, gold is a buy, buy on dips. I mean, you are getting, at this point, you might be getting a little extended in the very short term. But heading into 2018, the idea should be that you want to buy, you want to buy down days, down weeks, et cetera, et cetera. So don't be, worried about missing $15 and what could be. I think honestly, 2018 could be a massive, massive breakout for gold, just like we saw with copper this year. So yeah, gold again is looking to buy weakness in gold heading into 2018. As mentioned last night, levels for resistance probably up near 1295. Okay. Here and here, right? June, April highs. Silver, just an amazing chart. Bottomed right where it should have, has wiped out all of December's losses, actually closing positive on the month now. Watch the channel here because the channel is perfect, and you've got resistance probably up around 1690, right? In silver, this is the CFD version of it. I think you've got the 200-day up near there as well, and you do. 1695 is the 200-day, so resistance up there. You're going to want to, I actually think, and I have for some time, as you know, I think that silver is a cleaner chart than gold. It may be that the median line actually, of this channel actually provides support at some point, right? On a quick dip or something. It was resistance, of course, on 1220 and 1221, and we've broken out higher here this week. Okay, so yeah, with silver, we will be looking for the levels that we want to operate on for the best possible entry. Okay, let's see, what's that do? Put you here. Let's see what this looks like. So that's a pretty good looking structure there. Obviously trading right through the top of it, just as we did up here on 1213, the last top. But this is, I guess, an hourly chart, but I would pay close attention to this slope moving forward, because when silver goes sharp, we know how quickly silver can move, right? It's extremely volatile. And it tends to go in kind of straight line moves, but with sharp interruptions. So if you get a sharp interruption in this move, I would be looking for support probably within this slope, maybe even down towards the lower parallel again, just as it did, pull back here on 1221, 1222. So follow that in silver. Great chart to watch. All right, what about copper? Copper may have gotten a little bit ahead of itself here. I don't know. You're actually testing the 2011, 2000, well, it's both 2011, but it's the log scale trend line, and it's also the high from 2014. So copper has traded back, really erased the entire last leg of its downtrend, and might be in for a little bit of a pause here. But that does not mean I am looking for copper to completely get killed. In fact, copper is one of the strongest trending markets. If you look back at the trend in the early 2000s, I mean, look at this, okay? Now, there were still pullbacks here. In fact, some of the best entries were on the 52-week average in copper, right? And we haven't even hit that since October of 2016. So, we could be in for a nice pause in copper, but copper is going to be, again, just like the other metals, should be a buy on weakness. Although silver and gold are probably going to be better. in 2018, given that copper has done so much damage already, right, on the upside here in 2017. So nothing to do there yet. Did have that wonderful, remember that 5% down day we had? I posted a few things about it saying, you know, looking like capitulation low, and certainly it was. Obviously, we had the COT also. People freaked out selling copper at that point as well. So looking higher in copper generally, but allowing for some pullback here given the intense run we've had. You could watch this trend line too, you know, as you head into the new year. All right, let's take a look at the DAX. Mahai, when look at the DAX, is one of the cleaner ones. So we left off last week looking at this exact structure. Actually, I think we were right here. So yeah, this is we last webinar would have been 1220. And that we were right here. We were looking at this, thinking we could bounce around or, you know, whatever. I offered two scenarios, right? I said, you look for it either to break down on the median line, break down and then sell the bounce, right? Or look for the bounce off the median line consolidation and then sell that. So we've obviously gotten that scenario. You know, 60-minute, let's go 60. You've got a very clean draw. It actually, if I'm looking at this, it almost looks like it could be a smaller version of all of this, right? Because you got this three-wave drop here, just like you had a three-wave drop here. So I'd be looking actually Mahai for one more push up through this high here, 13,138, 13,140. And I'm not sure if you're going to get all the way back to 13.2 or not, but that's the 618 of this. But in order to complete a correction from this low, I'd like to see it, you know, I'd like to see a move above 13,140. So that would be A, B, and then a push above 13,140 to complete wave C. Preferably you get, you know, the rally from here, from the 1227 low, this morning's low, you get that in 5 waves to go A, B, C, and then you start off 2018 with a just slaughter in the DAX, because that would be the third of the third wave down within the sequence from the 11.7 high, right, the November high. And if that plays out, it tells us a lot about you know, what Euro might do. We might pull back a little bit here with Euro, and then you know, essentially surge higher early in the year as the DAX takes a dive. So something to consider if you're trading Euro as well, right? But yeah, just look at it literally like similar to is a smaller version of price action from 1121, right? So you got the bounce, 3 down, 3 down, and then look for a 5-wave rally to exceed this level, 13,140, before turning super bearish on the DAX for the third of the third, okay? All right, let's head into the crypto space. Here we go. Bitcoin, okie dokie. So the silver comparison, which you guys love so much, I'm sure, Bitcoin. Look, I think Bitcoin is, after, it's bounced this manner, but I actually think there's big time downside from here. So the comparative is specifically silver from February of 79 on the way up. And when silver started to top, or did top, remember we talked about last week the risk in looking for like a final wave, so to speak, right? Looking for that final fifth wave, because they tend not to happen in blowouts. In blowouts, you're just over, right? So if we're going from here, which is November of 79, which would be equal, in my opinion, to September of 2017 of this year in Bitcoin, right? So overlaying that, you can see the 1, 2, 3, right? And in this case, it would be like, kind of a 1, 2, 3, right? And then everyone's looking for that final push in a fifth wave until it gets murdered, much like it did here. So silver in February of 80 stopped initially at the 55-day average, or very close to it, bounced, and then of course it was over. So doing something similar here, we are pretty close to, the low was very close to the 55-day average on 12/22 last Friday. We've gotten a bounce, and now we are starting to roll over. So I'd be very careful in terms of thinking upside. You got a possible head and shoulders top here, right? Shoulder, head, shoulder. And if we start to break down, I'd say if you're starting to break down below 12,688, to me, that's a head and shoulders confirmation, right? Call it 12.7. And at that point, Bitcoin just might be done, might be over. Okay. Pretty clean 5 or 3 wave rally as well. A, B, C, right? This is 60-minute Bitcoin chart. Top 61.8% retracement from the drop. So yes, to me, big downside potential here in Bitcoin. Okay, all right. I'm going to wrap it up. Obviously, a little lighter on the attendance today, given that it is the holiday season and it's a bit quieter than usual. But thank you all, as I say every time. Thank you for your time. Thank you for being here. Thank you for wanting to learn. And all in all, 2017 was a pretty good year. I'm looking forward to 2018, what I think could be a special year for the commodity currencies. We did see copper in 2017. We came into 2017 really thinking, or remember, I was thinking that, the dollar was going to be very bearish. But I was also thinking that it was going to be that the Aussie was going to do better than it did. Well, it might be, we might be delayed a year, right? Aussie might have to play some catch up. If you think about from the fundamental angle, copper doing what it did, eventually inflation will rear up in Australia, and they're going to have to raise rates, and people kind of so used to them not doing it that I think they might be caught off guard. So anyway, Mahai saying which should be the levels for Bitcoin. Okay, so the levels, with the turns and the analog, a little different, but if you go, Mahai, if you go to the levels, so let's pull this up here. If I go to the levels, okay, so if I go from the 2013 high to the 2015 low, right? And if I do each fib off of that, off of here, so 1618, 2618, 4236, 6854, 1109, and 1795, those are the levels. Okay, so the levels continue to play out on these fibs. We topped pretty close to obviously the 1795 fib, which is 18,293. The support was actually spot on the 1109 fib, which is 11,358. So your next fib is $7,079, which if you get down there over a number of weeks or something, although this thing could happen in a couple of days because it's Bitcoin, you'd be talking about the 200-day average, which hasn't been touched since 2016. So the levels on the short term, it already happened. You already retraced 618 of this, like to the dollar amount, literally. Your breakdown level, as I said before, is probably 12,700. And I would be looking for maybe some pause. You could pause near 9,100 or so. That would be the low. The levels that I'm paying attention to. I'd write these down if you're interested in trading it. But actually, 9,000 is the 1129 low. That could be a level. Okay. And ultimately, the next fib level is 70.79. Although I would look until the 200-day average was touched, which would be lower. Okay, now trading these things is a different ball game altogether because, as you know, when you see the market moving in a very violent manner, and typically that's when an experienced trader or an opportunistic trader would want to, trade. You tend to get these exchanges; they go down. Right? So you're not able to trade them. Yeah. So, the reality of the situation is that even if we are right on all of this, I'm not sure it'll be able to, I'm not sure that we'll be able to actually operate it, but we'll see. How many bubbles of such level do you think I will get during my life? Yeah, I don't know. Probably. I don't know if we're ever going to see something like. I mean, really, no one's ever seen something like this, right? I mean, people that traded for 30 years. It says something that the only comparison I can find is going back to silver in the late 70s, early 80s, right? I mean, this dwarfs anything else. It even dwarfs that. But it's the only shape that I can find that makes any sense. And part of that is because, again, we talked about this, but because of the structure of the market itself, Bitcoin is a cornered market, right? Silver back in the 80s, 70s was a cornered market. Those are the only markets that can do this, that can go up like this and then crash like this, or have the potential to crash. Like we haven't seen anything yet, because that's what drives price up so high, is that the supply is all held by a relatively small amount of people. Once they try to give it out and distribute it, presumably they've sold a lot already, but once it starts to go down, they try to sell more. The market's in such weak hands that it completely falls apart, right? Because it's not the same market it was before, held by different people. Okay. All right, so with that, I am going to wrap it up. Looking forward to 2018, especially with some of the commodity currencies, and I guess we'll continue to observe the cryptos too and see what the hell is going on there. But yeah, all right, everyone, thank you very much. Have a wonderful rest of 2017. Have a safe celebration, of course, on New Year's. And we'll be back and doing this next week, of course. All right. Okay. Take care. Bye.